What is going on, everyone? The sell-off is getting stronger, and market history is telling you everything you need to know right now. Some traders are going to get trapped by this, while others will use it to their advantage. Today, we cover what's going on with this sell-off, what to look at, and we have some really good news on how day trading is about to get easier for smaller retail investors. Let's get to it.
The price action today looked a lot more like the norms for September. We can see the SPY continued to slide off today, mimicking yesterday's drop. I know yesterday the market was falling as Jerome Powell did not mention rate cuts or an indication of rate cuts, so we had a market sell-off. Today, at open, the market sold off in a similar fashion and closed down 0.32%, falling down to a critical support range around 659.50 to 660, which we will talk about in a little while. But the market has actually been on quite the recovery from April lows. I know that this has been a pretty historic recovery. It might not match some of these bigger recoveries like during 2024 and the end of 2023, but either way, we've had 107 sessions without a 2% drop out of the S&P. That just highlights how, I would say, strong this overall uptrend has been so far this year.
And Tom, today the market fell by 0.3%. So if you thought the sell-off recently has been bad, a 2% drop is more than due. But as we can see from the data, there have been multiple times in the past where, we've been, on 300-day plus sessions without a 2% drop. I think the key thing to be aware of right now is that, yes, the market has been crushing it, and that's great to see, but it can't just go up every single day, and pullbacks are expected, normal, and healthy, and a lot of times, this is where a lot of opportunity comes into play, not only for short-term bearish opportunities, which can be very profitable, but maybe even in a more exciting sense for longer-term buy-the-dip style opportunities as well. When we look at today's heat map, it definitely was, showing that we are seeing this selling pressure cascade into other areas of the market. Seeing big tech down definitely is a rough sign. Apple, Nvidia, Google, Netflix, Oracle, Palantir, so many stocks were in the red. Tesla had a good day, which is good to see, but clearly it wasn't good enough to hold the market up. And then, Tom, I also have to just take a moment to give a giant shout out to you because you nailed it yesterday with your support level at that 662.50 mark. Right when that broke, the market just tanked for the whole day. So shout out to you.
Yeah, that was actually a critical level on the SPY, and we saw that level from the past few days. It was a previous all-time high, so of course we have to keep that one on the radar now as resistance even. There's going to be a lot of fun levels coming up, but yeah, Mike, whenever the market's dropping here, identifying these levels and watching for these breakdowns will be very key for the next couple trading days, especially as we're just in a rough time of the year. We've talked about this a lot. We can see here September seasonality is pretty rough, right? Especially whenever we get towards the end of September, like the 24th through the 30th, we can see the sell-off starts to really accelerate at the end, especially on the last 5-year average there. Now, Mike, I know that everybody's been looking at the market dropping lately, and there's one thing that's been rising, and that is the VIX. I know the VIX has been talked about a lot recently during this market sell-off. Now, the VIX did end up closing down 2.71% today, but if we go to the daily chart, we can see that this week in general, it has been coming up off of recent lows. And whenever we start to see the VIX rise, while the market is up 1.6% up to an all-time high, we can see that 1 week later, 2 weeks later, and especially 3 weeks later, the data gets pretty rough. And we looked at this yesterday, and with the way the market pulled back today, it's definitely concerning to see data like this.
Tom, it is so rare to see historical stats when the market is positive only 8% of the time, and that's exactly what we have right in front of us on this 3-week later column. So I think this is certainly worth keeping in mind. The historical drops certainly are, pretty respectable. And one thing that I really like to, keep in mind while looking at the VIX is that it is a reflection of what, all of these smart money traders out there expect with the market, because when you have the VIX rising, it is showing market makers pricing in more volatility in the future. And a lot of times they do that because they see more risk on the horizon. So I certainly think this is worth paying attention to. And I think it's, great to have this historical data. And then on top of that, let's also not forget that not only with the historical VIX data and not only with the historic selling that we see in September, we are also in a very rare 9-day stretch of the year that is especially weak, which is between the holidays of Rosh Hashanah and Yom Kippur. This started on Monday and it ends in a week from now on Wednesday, and this 9-day period is weaker than even the normal weakness that we see around this time of year.
I know, it's pretty insane, and a lot of people might say, well, Tom, how does this have any effect on the stock market? Well, whenever you think about, Jewish holidays and a lot of the bigger funds and the big money out there, those go hand in hand quite a lot, and it's definitely an interesting stat, to say the least. I know it's one that might get some head scratches, though, right? It's something that is very, very interesting. But Mike, whenever we're talking about this overall move here with the overall market, we're talking about VIX starting to rise. I am getting a little bit concerned with what we're seeing in the short term with this price action. These past couple days with the SPY, the pullbacks have been a bit more accelerated. We can see that on this overall uptrend here for the past couple of months with the SPY, it's pretty rare to see 2 red days in a row. And whenever we do, we have seen some bigger sell-offs start to come into play. So I am going to be watching a few levels for tomorrow. I know that yesterday we talked about that 662.50 area as a true level for a breakdown. For tomorrow, 659.50 is going to be the next level that I am watching for. If we end up breaking through that, I think we could end up seeing a larger sell-off. I know lots of people are watching 660, but there's been a lot of extensions down to that 659.50 area. So I want to make sure that 660 breaks and ultimately for us to get through that 659.50 range. Now, I do also, though, Mike, like using that 662.50 area as a positive resistance for the next couple days. If the SPY could hold below there and possibly reject, that could make for some good entry opportunities. Kind of like today, how the SPY opened up close to 665 and rejected back down.
Sounds good. Yeah, we're still very close to all-time highs in the grand scheme of things, but I think this pullback, is definitely a change of tone. And for those traders out there who are, not positioned for this pullback, it definitely can be pretty nasty. So let's stay adaptable. And let's say in the worst case scenario where you have a position that's going against you, that's okay. Keep the loss small, survive to the next trade, and there will always be more opportunities. Where I think a lot of people get hurt is, just bag holding bad positions. So let's stay smart and stay adaptable. And in some other news, Tom, we actually have some really good updates related to day trading for smaller retail investors. FINRA came out today and approved amendments that are going to basically replace the long-standing $25,000 limit for the PDT rules. So this is pretty exciting, and I feel like this is something that people have been, begging to get changed for a while now.
Yeah, they definitely have, Mike. And if you guys didn't know, the $25,000 PDT rule was put into place in 2001 amid the dot-com bubble crash, as regulators are pretty worried that small traders were taking too much risk at that time, right? There was a lot of volatile internet stocks going crazy. Well, what's going crazy right now, right? We have a lot of AI stocks, nuclear stocks, a lot of different sectors out there, right? But AI is probably at the forefront here, kind of like those internet stocks were. Either way, though, FINRA is replacing the mandate, and now this gets a little bit complicated, but they're replacing the mandate with an intraday margin rule that applies to existing maintenance margin rules to intraday exposure. In other words, one's intraday buying power will be based on the margin requirements for the positions they take on during the day, not a fixed equity minimum. This is what CNBC reports. Obviously, Mike, a lot of traders are probably confused by this. Can you help shed some light on this confusing rule for us?
Exactly. I guess in the simplest sense, you can trade with whatever size account you have. but how much you can trade just depends on, the riskiness of your trade. So there's no longer going to be a $25,000 limit. You're free to trade as much as you want. And that's how it's going to be. And I think that's going to be pretty good for markets. What I will say, though, is that the SEC technically has to approve this before it actually gets implemented. And while there's no saying exactly when that will happen, it's expected to get approved and implemented in late 2025 or even in 2026. So we shall see, but that's good to see. Tom, looking at the lineup for tomorrow, it looks like we do have some exciting events before open.
We definitely do. So durable goods orders, the GDP growth rate, QOQ final for the second quarter, and then also existing home sales are set to come out tomorrow morning. Now, 1 hour before open, we're going to get the durable goods and the GDP growth rate. 30 minutes after open, we're going to end up getting the existing home sales. So that's what we're looking like here for tomorrow morning. I think Friday's data will be even more important with the PCE data coming out and then personal income and personal spending, which I think could end up moving the markets quite a bit. Tomorrow, I'm generally more worried about that GDP growth rate coming in around expectations.
Tom, I have to say I'm very excited for these next 2 days. Like, we're seeing an interesting shift in the market right now where, of course, we're seeing a little bit of selling pressure, which, isn't a bad thing. It's healthy by many metrics, but we also have, a couple events lined up that aren't anything too mind-blowingly crazy, like an FOMC interest rate decision. And, sometimes those events get a little bit too, overhyped, but just like we saw from yesterday with Powell's speech, we can see some pretty good moves from I don't want to say these smaller events, but I guess you could say events that are less crazy than an FOMC interest rate decision. So I guess all that is to say is that, we should see some pretty good action throughout the rest of this week. Looking at the earnings lineup, there's nothing too crazy for today, but tomorrow we do have Costco set to report after close. So keep that in mind, and that's pretty exciting as well. And besides that, how about we jump right into some setups and predictions? And a stock that's definitely on my radar is CNC, and it is to the upside. I know we've hit on this a lot over the past few videos, and it was very nice to see this stock pop up by nearly 6% today. That's awesome to see. There are 2 big money trades open on this one, so certainly no complaints there. The stock is doing well, and it's still on my bullish radar. There is some pretty good resistance right around that $36 level. We're still below 35, so while the setup has worked beautifully, I wouldn't be surprised if we saw it rise more. I would say the opportunity right now isn't as great as it was when we called it out multiple times in the previous videos, but I do still think it's a setup worth keeping on the radar, especially considering those 2 huge big money plays.
Yeah, that was an awesome setup. Then the way in which CNC started to consolidate to the downside, and then I really love the way it's coming up off of that dip. That makes for an amazing move, and I'm glad to see it starting to come back for the big money trades as well. A lot of people are enjoying those profits. With my first setup today, I'm actually looking at Intel back to the upside. I actually talked about this one earlier in the week, Mike. I believe I called it out on Sunday night's video, but I am watching for Intel to consolidate to the downside. Now, as it starts to consolidate, I was watching for a possible move and bounce off of support back up, and we're actually starting to see that play out today with a good 6.4% move. As you guys know, or should know by now, NVIDIA invested $5 billion recently into Intel. Well, today, Intel ended up coming out and approached Apple, and they're seeking an investment from them now. So that's pretty insane. They're seeking an investment here. Now, Apple's a longtime Intel customer. They did switch to in-house processors in the past 5 years. SoftBank also announced a $2 billion investment in Intel last month as well. So Intel's definitely been in the headlines quite a bit recently. And of course, if they do get an investment from Apple here, that would be pretty awesome in my opinion, right? That would help solidify things, and just also, them working together would obviously help Intel than them not working together, right? Obviously, the more partners, the better, especially in the AI space. But as I look at Intel, I love the way it's moving today. I'm going to be watching for a good continuation tomorrow, and if it can break 3180, right around the high from after hours, just keep watching for more great momentum, like what we saw today whenever Intel broke above 30.
All I have to say is shout out to Intel's new CEO, Lip-Bu Tan. Ever since he stepped in, the stock is definitely changing for the better. Not only did Intel have a recent deal with Nvidia, and then also the White House took a stake in them. SoftBank invested into them. We might see a deal with Apple now. Who knows? We'll see. But yeah, Intel has been exciting to see over these past few months, especially. And I was super happy when the stock gapped up on September 18th when it popped up by like over 22%. That was huge. And I would love to see it put more pressure on its recent highs. It's one of those stocks that has been beaten down so badly over the past few years, and it really hurts to see, especially considering that it's in like basically the best industry you could ask for amidst like an AI bubble. So yeah, we shall see, but let's keep a close eye on Intel. Another stock that is definitely on the radar is APP, but it is to the downside. This is AppLovin, and I am relatively bearish on this one. It has been crushing it over the past few months, where it went from, you could say, $320 a share all the way up to highs of like $670. It's crazy. To the point where it's at right now, it's a little bit overextended, and we're now finally starting to see short sellers come into play. If we continue to put pressure on recent lows, like let's say specifically around like 635 to like that 632 area, I think that can trigger more shorts to come in and more long holders of this stock to take profits, especially considering we are seeing the overall market weakening. Either way, APP is definitely on my bearish radar, and I'm excited to see how it does throughout the rest of this week.
Yeah, shout out to you, Mike. That was an awesome level you called out yesterday around that 660 resistance, and I know it ended up rejecting there very well this morning. Could have made for a really good entry on that overall resistance touch and ultimate move back down. I will keep my eyes on this next support range for a further breakdown. Whenever you go to the daily chart, AppLovin definitely is overextended. If you guys have ever wanted to see what an overextended stock looks like, go check out AppLovin's daily chart. But with my next setup, I'm looking at Tesla to the upside. Yeah, Tesla is crushing it right now. Again, today, even on a day where the market goes red, Tesla has an extremely great day, closing up around 4%. If we can continue to see Tesla put pressure on its highs like it is, I am going to be watching a very critical overhead resistance, and this resistance is right at 444. If we look over the past couple trading days, Tesla has rejected down very close to this level. Ultimately, though, we can see that that wick there very early in the morning on Monday extended up a little closer to 445. Now, the high of day today was closer to 444, but if we examine this under the X-ray vision and under the microscope, we can see that there is a massive sell wall at 445. There's 129,000 shares stacked up there. There's even some sellers stacked up at 444 as well, around 58,000 at the end of the day today. Ultimately, if we can end up breaking through this resistance range, I will be watching for a continuation with Tesla. I like the fact that there's a double top here. It's a clear resistance. We can see it on the X-ray vision. And also, Tesla just continues to show strength, even whenever the broader market's red.
There we go. Let's keep a close eye on Tesla. And then besides that, let's jump right into today's momentum plays. And with the first one, we have Qualcomm to the upside.
Yeah, Qualcomm, another chip stock, they ended up doing very well today, again, despite the market falling. If they can break out above 174.50, then watch them up.
With the next one, we have NewScale Power, ticker symbol SMR, to the downside.
SMR has been extremely bullish lately, but today it had a pretty bad drop. If it ends up falling under 39.20, then watch for a downside continuation.
And then with the last one, we have Palantir, but to the downside.
Uh-oh, the big boy. Yeah, they pulled back today 1.6%. Probably helped add some downside pressure to the SPY. But if they end up breaking under 177 right at their low of day, then watch for a continuation to the downside and maybe some put opportunities.
All right, so we have these three tickers on the radar for potential continuations tomorrow, if and only if they break through the levels listed. Setups come and go. How you trade is much more important than what you trade. Learn how to make smart, long-term oriented trading decisions for free in the Key Lessons channel of the StockedUp Discord. And besides that, it is now about that time for today's $450,000 big money trade. And we are looking at ticker symbol NEXT. Today, the trader here bought the 7 strike call options that expire on October 17th of 2025. This stock has been struggling quite a bit over the past few months. They're an energy company involved in the liquefaction of natural gas. Basically, looking at this stock here, it has sold off quite a bit. And when we zoom out, we can see a lot of times when this stock has, had big drops in the past, it tends to have like decent sized recoveries. And it appears that the trader here is looking to profit off of one of those, considering that they bought the 7 straight call options that expire pretty soon on October 17th. Looking at this trade, I would say it's a little bit more of a higher risk trade, mainly due to the short-term expiration, but that also comes with a higher potential reward.
Yeah, that is a pretty short-term expiration here, especially considering that Next has fallen down as much as it has. I would have thought that maybe there'd be some more time here, but again, maybe they're expecting like for a quicker recovery here, maybe more like the box that I'm highlighting right now, rather than the box on the left side of the screen where the stock consolidated for a long time before finally moving again. It does seem like that this stock definitely likes to have some like V-shaped recoveries every now and again. And if we do start to see that overall support range here around $6.50 continue to hold up, I think this will be great in the short term. I think it's a pretty risky big money trade again with the shortness of the expiration like Mike said, but I do think that it's one that has a positive risk reward. Like if we start to get a good move to the upside, of course, you could probably target $8 plus. If we have a bad drop here, I wouldn't go much below the $6.50 recent support. So that makes for a pretty positive risk reward at least.
There we go. So let's keep a close eye on it. It's a short-term expiration, so it'll be fun to watch in the short term. But before we move any further, Tom, we have to give a giant shout out to today's member of the day, Steve, in the Stocked Up trading floor, who has been crushing it lately. He made a great post in the Profits channel today. Huge shout out to you, Steve, and huge congratulations on your amazing month. It's great to see posts like this, and keep on rolling. If you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the Stocked Up trading floor. Not only can you access our weekly live events, one of which is tonight actually, but you could also access our army of custom trading bots. Today, Surge had a nice 441% pop with FCX put options, 359% pop with Riot call options, 150% pop with IREN call options, 130% pop with Baidu call options. The list goes on. And of course, there were a handful of duds mixed in there as well. But you could also access the daily big money trades before we cover them in these nightly videos. And you could also see in real time which big money plays are moving up the most. For example, we could see today the big money bot was showing that the BABA call big money trade is now up 500%, which is great to see. But you can get notifications like this before it's up 500%. Like you could see when, they're up 50%, 100%, and so on, which can, help you focus on the trades that are actually, working the best. So definitely check that out. You can save quite a bit with coupon code BIGMONEY down below. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.